Good afternoon. Hi, I'm Mike. I'm with your host of Insider Secrets that's brought to you by My Core Intentions. Hope you're all doing well today. Let me ask you a question. Have you been thinking lately about what your intentions are, what your why is, and what really matters to you in your own life, your own investing career? Are you starting to live maybe a little bit more balanced life? If you're stuck and looking for some direction, My Core Intentions wants to help with exactly that. Help you deliver some proven real estate strategies through some personalized coaching. I'd like to hear from you. I'd like to hear about your practical experiences and your plan for growth and what your intentions are, how you set those daily, how you set those weekly, and how you work through those. So if you're considering a coach to help with your real estate business, to grow it, to plan, to be prepared for the future, and what your intentions are, give us a call. Let us discuss with you your why and how to give you some direction and how to help you with your business and your family. All right, let me introduce our guest for you today. I'm joined by my friend and real estate investor here from Chicago, Matt Mesick. Matt's a seasoned real estate investor with a little bit different twist today for us. Normally we're on a multifamily path or a property management path. Today, Matt's going to talk to us about real estate investing in the single family market. But you know what? He gives us a really great perspective on investing. Matt's been investing for about 6 years now, and he's completed over 80 transactions. But what's really impressive about that is 55 of those transactions have been completed in the last 13 months in 19 different states. So Matt's strategy and his focus is a little bit different. We're going to talk about market conditions, and where the real estate space is at today. So Matt, what I'd like you to do is say hi to our listeners and describe for us in one word your real estate investing strategy.
Hi everybody. Again, thanks Mike for having me. I really appreciate it. In my real estate investing strategy, just a couple words, quick flips. It's hard to define it.
Quick flips, that's great. I think some people are going to really get a lot out of what we have to say today and what we're going to talk about today. So Matt, sounds like there was a little bit of a ramp up period. In my introduction, and we talk about you've done 80 transactions, however, 55 of those have been in the last 13 months. It sounds like there was a bit of a ramp up period to get to there. Why don't you share some of that with us and tell us what it took you to get from 0 to 80 transactions?
Yeah, so the reason for that, what I really did is I switched business models. So when I started out, in Chicago, we have a lot more bungalows and older houses, and they require a lot of gut rehabs. So I was doing really big projects with like 200 to 250,000 rehab budgets that were basically like second floor additions, full gut rehab, anywhere from 3,000 to 4,500 square feet. And I was doing, around maybe 5 of those a year. And then, the timeline for that was just taking so long. It's a lot of management. You have to manage the contractors, the project. The timeline always gets inflated. The rehab budgets always get inflated. And it kind of just wasn't getting to where I wanted it to be, and I wasn't enjoying it. So about 13 months ago, I switched business models, joined with a new business partner, and did the opposite. So instead of those projects were maybe 500 to 800,000 ARVs, which is also on the selling side. They're gonna sit on the market for a while because there's a smaller pool of buyers. So I did a complete 180. Started buying houses that anywhere from like 30,000 to 100,000. And with ARVs of anywhere from 100,000 to 250, which is right where the 80% of the buyer pool is, where the properties sell right away. But I really focused on also beforehand, I was purchasing from the MLS and from wholesalers, which I kind of refer to as like, you're buying retail at the highest price after everybody in the supply chain in the middle have already taken out, profit, and there's less meat on the bone towards the end. What I've been doing over the last 13 months is been buying directly at, they're all bank-owned REOs. So I've been buying from auction houses, uh, working with asset managers and buying pre-auction and just buying those more in bulk. And so buying as is and selling as is, the majority of those. And then the ones that I did rehab had very, very low like rehab budgets, like 8,000, 12,000, maybe 20,000 at most. So ones that were really close, like they were livable, really close to retail, but they just kind of needed, new paint or new countertops or, landscaping, small things to, put it on the market and sell to a retail buyer. And that's been my strategy. And those are more predictable. They're quicker turnaround times. They sell faster. And that's, totally change it to focus more on volume with smaller profits than big, long projects.
Interesting. So Matt, what I'd like you to do is tell us a little bit about your backstory. I mean, I don't think you woke up one day and just were a real estate investor, right? You did something before that. Why don't you tell us how you got involved in real estate and what really attracted you to the business, where you came from prior to that?
Yeah, so I had went to DePaul University. I got a degree in accounting, and then I was working in downtown Chicago as an accountant. And then one day I happened to read the book Rich Dad Poor Dad. And that kind of really changed my entire perspective on life and business and kind of what I wanted to do in life. So from that, after I read that, I kind of fell in love with real estate investing. I decided, that's what I want to do with my life. And then so I started small and doing wholesale deals part-time while still working full-time. And after doing that for a couple of years, I leave my job and go full that for the past 6 years.
Interesting. So what's your passion about around real estate? What really excites you?
Just kind of everything about it. That, it's a business model that can be, it's not like reinventing the wheel and kind of starting something from scratch. Like, real estate's been around for forever, and you can really, there's so many different niches and strategies, and kind of learning about each one and, doing each one. It's, really attractive. And then, they say like 90% of people build their wealth through real estate. And then also what I'm looking for in the future as well is, start building for passive income.
Yeah. Okay. So, one of the things I always like to teach people is that in real estate, you can create short-term cash flow, but long-term wealth. And, I think that you need to have both of them along the way, right? So that you know that your future's secure, but that you can live day to day today. And I think that sounds like kind of what your strategy around it is as well.
Yeah, I agree.
How'd you choose? The one thing I just want to comment on the book, Rich Dad, Poor Dad. I think that a lot of people have different books that have spurred them on. That was always a good one, though, because it talked about the 4 quadrants and where you could spend your time, either as an employee or as an entrepreneur or somewhere in between, right? And I think books are so relevant in people's lives. I always talk to my coaching clients about, hey, you know what? The more you educate yourself, the more you learn. It opens your mind. It expands you to think and do things differently, right? So I think that was a great book. Is there anything else that inspired you beyond that? Or was there anything specific in that book that really made a difference?
Well, no, that's exactly what it is, the cash flow quadrant. You on the left side of the quadrant, you can be the employee or the small business owner, but on the right side, you can build a bigger business that's automated, and then, be an investor and have your money work for you. So for me, that was kind of like seeing the Matrix, where there's 2 pills to take, and there's this other one that even though it existed, and it was in totally different world of what I grew up in, what I knew existed. So that was a really eye opener for me, and that's kind of what, like the pivotal moment in my life where, I decided to make a change.
Excellent. So why single family over other asset classes?
You know what? So it's just kind of where I got started. It's the most plentiful. People are the most familiar with it. And yeah, that's just kind of where I'm at now.
Okay, so that's what's most attractive to you and what you've kind of built your business on?
Mm-hmm.
So Matt, so you said that you took on a new business partner and your model changed. Can you be a little bit more specific how that, what it was before and to where it's at today, what that model looks like?
Yeah, so it was 100% just doing what we call them pop tops, bungalows, bigger rehabs in Chicago that were local. Um, and then, well, kind of what spurred it, if you're familiar with virtual wholesaling, that was something I was looking to get into. And then I met somebody that had just started doing that on a small scale. But with wholesaling, you just get properties under contract, and then you got to find a buyer. And usually you have like 30 days, and everything's got to kind of work out perfect for that to happen. So what we were actually doing, so I have a lot of prior experience in raising capital for deals. So I've raised almost about $15 million now in total for all the real estate transactions I've done. So I met this other business partner, and I like kind of what he had gotten started. And I was like, well, if you actually bought these deals first, then you could list them on the MLS and get top dollar, and you would have longer than 30 days to market them and find somebody. So when we joined, that's what happened, and I started raising capital for that business. And then it went from basically wholesaling every deal to actually buying every deal cash and closing on it, and then listing it for market value to local investors. And the other thing on top of that too is like you said earlier, we've closed in 19 different states. So it's not where it was just focused on one area and whatever, because like 60% of the Chicago housing stock is multifamily, like 2, 3, 4 units.
Right.
And then also like everything has been built in like 1819 or 1890s to like the 1920s. So you can't really like buy something and do like a small rehab, because everything needs to be, all the mechanicals usually need to be updated. And then what's really cool, what I learned, and getting familiar with different parts of the country, we could buy houses that were built in the 1970s, only do like cosmetics updates and not have to touch the mechanicals. So the rehab's a lot quicker, it's all a lot faster. And then I've also started getting familiar with different septic tanks and wells and whatnot, which I wasn't before. So really having kind of like a fun time with that, learning all the different nuances from different parts of the country, different type of houses. We've actually flipped a few mobile homes as well. And then a condo here or there. So just kind of, I really like the variety and the volume. I feel like I'm learning a lot more than just being stuck in kind of one niche with like less volume.
Yeah, interesting. So being in all the different states that you're in, and I think the number is like 19, is there anywhere that you really like specifically or over another area for investing?
Not in particular. What I really focus on always is the numbers. So I'm really good at analyzing for ARVs, because I use a couple of different online websites. And what I really do is I try to stick to maybe plus or minus 200 square footage. And then really, even if you do like a whole zip code, I try not to go too far from where the actual house is. So I really look like, at maybe the 5 to 8 closest houses from the very specific part of like that neighborhood. And I can usually nail it down pretty well. Okay. And then I make sure that I buy at, what's really good is to buy at 30% of ARV or lower, and then sometimes up to 40%. Because as an investor, what I know when I've bought, and speaking to other investors, a lot of investors buy at maybe like 50% of ARV. So I know if I can buy below that, then I can usually sell for around there. But yeah, to kind of answer your question, we've done a lot in, we happen to do a lot in Florida, in New Jersey, New York, and then Tennessee as well.
Is that because you knew somebody specific in those markets, or was it just through your own research and due diligence that you said, hey, here's a good market, let's see what we can find?
Yeah, so it wasn't really even market specific. We would get a list of properties that were for sale, and then I would just analyze every single property regardless of where the market was at, and just put offers in. And then, so we literally get them all over the place. Yeah.
So one of the things I find amazing is that, you were an accountant and you were just working a 9-to-5 job, just like most people out there, right? And you have gone from, in the last few years, you have gone from getting paid by the hour to now being an entrepreneur and to raising $15 million and having that other people's money work for you. And was that something that you built up to, or did you just wake up one morning and say, hey, I'm going to go raise some money?
Well, yeah, so it was, I'll tell you the story, like the very first story we had. So me and I had two business partners, and we are going to go buy a house, and it was, really, it's on the south side of Chicago, pretty cheap. I think around like 50,000. We got in a hard money loan set up, and all we needed to close was 10,000, which is almost kind of like the minimum to get. And so my partner had, had it raised from a friend of his, and then he had backed out like 2 days before closing. So it was like we're really in a pinch, and we needed. So what I did, and what kind of like I would recommend anybody looking to raise money. It sounds simple, but people want to do it. So it's like, okay, we need money in like 48 hours. We're going to lose this deal. I was too early on in my career to just know like, hey, can we push closing a week? And, then you raise the money. To us, it was like, make or break. So we literally like, let's just write down every single person that we think might have money in our network. And also anybody that we think might know somebody who has money in our network. And we're like, okay, let's all come up with 10 names. And then we did that, and we kept going and going. And by the end of it, like the list was almost like 100 people. And then we just started reaching out to anybody and everybody, saying, hey, I have this deal that's closing in a couple of days. We're looking for $10,000. We need it, or we're going to lose the deal. And eventually, at some point down the list, we had somebody that's like, oh, yeah, I'm interested. Send me more details. And then I can make a quick decision. So like not so much as like strategy off the bat, it was more like a sense of urgency where it's like, because a lot of people think, oh, you're asking people for money. But what you're really doing is you're offering an investment opportunity for them. And that person who did lend to us on that first deal, they did get really good terms. They were kind of able to set the price. So we offered this, and they're like, well, if you need it so quickly, I want this. And it's like, okay, well, either we pay, that amount of interest or we get no deal. So we did that, and after that, I was like, that was actually really, really simple. You just had to ask for it, which is like the number one rule of like, raising capital. So then after that, it was just every deal. I'm like, okay, well, so then we did that in the next deal and the next deal. And 100% of all my deals have been, I've raised capital for 100% of 100% of the deals that I've done.
One thing that I always try to teach people is that if you have a good deal, the money will show up.
Exactly.
You just have to ask, right? So and I just want to cover this piece real quick, and I don't want to get too hung up on raising money because that's really not what our focus is today. But what I want to know is, are you doing that on a handshake, or do you have specific documents drawn up? How are you doing that from a legality standpoint so that everybody's protected?
Yeah, specifically, promissory notes and mortgages, so the funds are secured.
Okay, great. So your investors are getting security in the real estate.
Mm-hmm.
Okay, excellent. So Matt, what was the biggest shaping moment for you in the last few years of your career? What do you think's the most that's been most impactful for you?
It's really hard to say. Well, so I've had a lot of different partners and different business models, and it's just really kind of focusing on the right people instead of focusing so much on the opportunity. Focus on who you're going to go after the opportunity with to make sure they have integrity. And that, because everyone's having a good time when things are going well and people are making money, but then when things don't go well, kind of people show their true colors. You want to make sure that you have somebody that has integrity that's going to go through everything with you all the way in the good times and the bad, and then always make sure that you have agreements and the proper contracts in place.
Yeah, that's very true. You want to make sure that you have somebody with integrity, and that's going to go through the good times and the bad times with you. That goes in all kinds of relationships, whether we're married or business partners, whatever, right?
Yeah.
So what do you think makes your investment strategy different than the other guys?
So what I kind of like, how do I like to explain it is like say like a supply chain, right? So if you're buying from the MLS, you're buying at the very bottom at retail. So you have the MLS, and then you have wholesalers, and then you have like banks, foreclosures, REOs. So I used to buy at the bottom where there's very little profit left, or everything has to go right to make sure the profit happens. And now I'm buying 2 notches above that. So like what I'm doing now, which is great, is I buy if I can sell as is for a decent markup, or if I want to do the rehab, I can get a big markup. And then even if that didn't go well and I couldn't sell to a retail buyer, then I could rent it out because, it's really hard to rent out a $600,000 property and have it cash flow when you're buying a property that's, maybe worth 150,000 afterwards. Like that's going to, rent and cash flow all day. So before I really kind of backed myself into a corner where it's like, everything has to go right and there's only one exit strategy. And where I'm at now and the way that I'm purchasing property, I really have 3 different options and 3 different exit strategies. So just about keeping the end in mind and, making sure whatever you're focusing on, that there's multiple options and that you're really mitigating your risk. That's kind of what I learned along the way.
Yeah, awesome. What's interesting is you brought up a topic that's very near and dear to me, and that's exit strategy. What I tell people is I've spent hundreds of thousands of dollars over a 20-year period, seminars, coaching, books, personal coaching, one-on-one coaching on a monthly basis, that nobody ever teaches you the exit plan. And I just actually finished writing a book. It's being edited right now. It's called Exit Plan, which will be out for release in the fall. But I talk in that book about planning from the moment that you set your sights on that piece of real estate, even on the back of a cocktail napkin. Figure out what your plan is. Know what your profit's going to be. Know how long you have to hold it. Because if you don't know those things up front, we're told that you make money in real estate on the purchase. But what people fail to tell you is that you don't realize that profit until you sell it at the end, or create some kind of an exit. Selling it's only one way, right? There's other forms of exiting the property. One of the things you've talked about a lot that has been sourcing deals. And I think a lot of times people kind of get hung up on, where can I find a property? How can I find a property? Is there any one technique that you really feel is your best technique for sourcing property?
Well, yeah, right. What I'm doing right now is I'm working with asset managers and auction houses and buying kind of higher up in the food chain instead of like, straight off the MLS or from wholesalers or, so yeah, what I'd really like to kind of do for the future is I'm looking to do bulk REO deals where I can buy packages of 10, 20 or more houses at once for a lower discount. And then, look at each one and sell them off one by one, either as is, or if it makes sense to do the rehab, or even, start keeping some of them as rentals. So sourcing it's more about the connections you have, and the higher up in the supply chain that you can get is really what I've started to focus on. What I realized is much more profitable and way less.
Sure. I always say it's not what you know, it's who you know, right?
Yeah.
Yeah. Hey, so we're here in the midst of coming to the end of this COVID-19 piece in this season that we're all going through. They're starting to open the world up around us. From a real estate perspective, do you think that we're going to see more deals come out? Do you think that there's going to be less deals? Where do you think the real estate market is headed at this point?
So there's definitely going to be a lot more deals, for sure. I know that the housing market right now is kind of exploding realtor-wise and, buyers and sellers. But for us as investors, a lot of people lost their jobs. A lot of people are starting to get their jobs back, but there's a lot that are not, a lot of people that aren't going to get their jobs back, and a lot of businesses that close that aren't going to reopen. And, there's like, whatever, this 3 or 4 month period where, no evictions have been happening and no foreclosures and there's forbearance and all that, but it's going to trail along, and either towards the end of this year or, the beginning of next, there's going to be a lot more foreclosures and REOs. And, I don't think it's going to be as big of a, crash or whatnot as, 2008 was. But as far as inventory for investors, that's going to grow for the next, 1 to 3 years. For sure, in my opinion, just from, just kind of like what logically makes sense from everything that's going on.
Yeah. I think I don't think there's any hard numbers out yet, but there's a lot of speculation. I think that there's going to be, a glutton of properties on the market again. Unemployment rate went up so high, but only a certain percentage of those people are going back to work, and everybody's kind of withholding on those projections and not really saying, hey, this is how many people we think are going to go back to work. But there's still going to be a lot of people that are going to be without income, and that's going to be a trickle down effect when we look at mortgages not being paid and rents not being paid and things like that. So I think you're right. There's going to be a lot of deals out there. How about for you in your own investing? Have the rules of the game changed at all for you in the last 90 days?
We've slowed down a little bit because we're kind of seeing where the market's headed. Our properties have still been selling. But yeah, what I'd really like to see and where I'm really going to kind of put the metal to the pedal is where when we do start seeing that more inventory and their lower prices. And I think, the banks are going to be overwhelmed because there's going to be more foreclosures and, whatnot. And then when that kind of happens, I feel like that'll deflate prices because there'll be so much inventory. So we started to slow down a little bit now to kind of make sure that we don't get too far into it. But then, later on this year or next year we're going to ramp it up a little bit more.
So some of the big things I'm hearing from you on this call are, that sourcing deals, that, some of that's about relationships, and that people should be out building a team around themselves and building good, solid relationships so that they can source those deals. The other thing that I heard you talk a lot about, that as a recap here for some of our listeners, is that 30% ARV. That's that after repair value that we get people, if they use a strategy, 30% ARV, then they're in the deal where they're really going to be able to make a profit. What do you see moving forward for your business, for your investing career with your partner over the next 3 to 5 years?
Yeah, so I want to start doing a lot more volume. Like I said, we've been buying bank-owned properties, and there's going to be a lot more of those. And I think they're going to be even better prices because right now it's the lowest amount of inventory it's been in like 10 years with the banks. And, now I feel like it's going to flood the market in the next 1 to 5 years. And the strategy's been working really well for me. And we've been ramping that up and, doing volume. And so I just want to continue to do that. And do a lot more volume.
So one of the things is keep building those relationships, right?
Mm-hmm.
So Matt, what advice would you give a new real estate investor or somebody just coming in the business, or even somebody who's been in the business for a while? What kind of advice would you give somebody today?
The advice I'd give someone that's brand new. Well, first of all, a lot of people don't want to do things on their own. They want to partner up. And I said, that's a great idea. Partner up with someone. Find a mentor and partner up with them. Find someone who's done a lot, and then ask them, hey, how can I help? I'll work for you for free. Just, if you teach me along the way. Because what a lot of people do and what I did is, you're like, okay, I want to get into this, or I went to a seminar, and then you partner up, with a family member or a friend. And, I partnered up with, 2 other people who also had no experience. And then when you're doing that, it's like the blind leading the blind, leading the blind. And it's like, okay, because, 2 heads are better than 1, but then you both don't know anything. So if I would have start over again from scratch, what I would do is find somebody who's done, who's been successful, done real estate full-time, 5 years, 10 years, have done a lot of flips, owns a lot of rentals. And I would just say, hey, what do you need help with? Let me work for free. Because when you're starting off, you're working for free anyways until you start, selling properties, making profit. And if you don't have any experience and the people you're working with don't have experience, that could take some time. So go work with someone, and they can teach you everything. They're gonna like the free work, and that you're really passionate about it, and do whatever they need help with, and you're gonna learn a lot on the way. So definitely find a mentor is the biggest takeaway.
Yeah, I think that's great advice. One of the things when I first got in the real estate business, and my entry into the real estate business was home sales. So I was a residential realtor and sold residential homes. But one of the first things I did was I sought out the most successful agent in my marketplace. And I went to him and I said, hey, what makes you so successful? And he let me shadow him for a few days. But better yet, he made me a cassette tape. That's how long ago this was. But he made me a cassette tape that I listened to all the time. And it just, I knew what to do. So my first year in the business, I went out, I sold 78 properties, didn't know a soul. So it's a matter of what you want to do to grow yourself. So Matt, any last thoughts or comments that you want to make to our listeners?
Yeah, the biggest thing is if this is really what you're passionate about and you want to do, and even if you're, the biggest thing is never give up and just keep going no matter what. Because there's ebbs and flows, and there's good times and bad times, and the only way that you're going to fail is if you give up. And if you stick with it, you're going to learn more and more and learn from your past mistakes, and things are going to get better, and you're going to ultimately get success no matter what. And every single thing that you do is a learning experience. It's going to help you to get better and better.
Yeah. That's great. That's great advice. Yeah. I think it moves us forward, right? It helps us to get better at what we do. So listen, if any of our listeners want to give you a call or reach out to you to, talk with you or see what your business, how they can work into your business model at all, how do they get a hold of you?
Yeah, so you can call or email me. My email is Matt, M-A-T-T, Mesick, M-E-S-I-C-K @gmail. My number is 312-871-9363.
Great. Thanks, Matt. And I appreciate your time today very much. You've been very helpful and thorough, which is great. We'll make sure that your information's on the website. And, if anybody needs anything, you could call Matt or you can call us at My Core Intentions. Thanks a lot and have a great day.
Thanks, Mike.